Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo artisans. It is Nick Petrozello, aka Cowboy, here, 8:30 a.m. EST, and we just had some data come out. We had data come out. The euros. The ECB did their main financing rate about 15 minutes ago, and then we had the U.S. unemployment rate just come out as well. So the markets are definitely moving around, moving and shaking, doing stuff. You can see just a little bit of an uptick on Bitcoin. Very quiet. Bitcoin's been very boring for quite some time. Bitcoin has been, with the exception of these kind of panic down to the 75 range earlier this month, going back to about the 15th of March, Bitcoin has just been flattened sideways, and that's a month. Again, there was some panic there that had to do with the wider market, not to do necessarily with Bitcoin itself, but with all these drops in the market, with all of this market turmoil, what you get are margin calls. And margin calls, what that means is that when people are trading and they're using debt, and they're owning a certain percentage of the trade, which is how most trades are done by the big money these days anyway. They don't put all of their own money. They borrow. I mean, they might borrow 1% or they might borrow 5 or 20%. It just depends on the instrument and the regulations in the market segment. Now, what happens is when the value of their holding goes down, they get a call from the broker saying, you have to put more money on this trade or we're going to liquidate you. So what they will do is sell other holdings, which are either in profit or at less of a loss, so they can cover that margin so they don't lose their investment on that trade, which is why you see maybe one major segment go down and it brings down the rest of the trade. This is called the rest of the market, and this is called contagion. Right now, there wouldn't necessarily be contagion, or at least not as much of it, if there wasn't for this. The real term is leverage, right? So think of it this way. The way leverage works is you put 20% down on a house. Well, if the value of the house gets really low, chances are the economy is probably pretty bad at that point because people are selling homes and no one's buying them. And then you're going to be underwater on your mortgage. So you're kind of forced to sell at a loss, right? So leverage is the fact that you had 20% of whatever, you put down 20% for that house. You had 100,000 of your own money to borrow another 400,000 for, a $500,000 loan. And when you do that in markets with the stock market and things move really, really quickly because you're levered up 100 to 1, things happen. Stuff blows up. Bitcoin got pulled down for that reason right here. There are also arguments that Bitcoin is past its bull market high. So let's just take a quick look on the daily chart here. And we'll go back through history. We'll take a look at earlier this year. Bitcoin topped out right here at about 110,000. It was kind of a double top because you had that top back here, which was at 108.5. And then you had this 109.5 right here, right? So a little double top on Bitcoin, high time frame. And a lot of people think that the bull market is over. There are others who feel that this move down had to do with what I just talked about, the whole market falling. So that being the case, what's happening now? Well, the thing to look at, in my opinion, is going to be the NASDAQ. And one of our Algo Factory members this morning pointed out that the NASDAQ is interestingly up while the Dow is down. Well, these things do happen. Let's take a look on a lower time frame here. Okay. Now, the NASDAQ is at a point where it's going to both be pushed up and down. I know that sounds strange, but the weekly, while it is bearish, has a moment of bullishness, which is why we have seen price kind of pop up right here, along with Trump reversing his, tariff, rules, whatever you call it, position, we'll say. And what we're seeing, though, are still lower highs. Now, this may end up being right here. This may end up being a lower high. This might go ahead and flip and head down. The unemployment data may or may not have affected this. In fact, we're going to take a look at that right now. But if this move right here, if we zoom in right here, this move up to 18,660 on the NASDAQ, if this can't recover and then head up, then prices are probably going to continue to fall. Markets will continue to fall. And what you'll see build here is probably a bearish descending triangle, which I'm not big on trading triangles, but I will say that they tell a story. And it's an important story if this triangle continues. And I'm not quite comfortable saying that this triangle is valid just yet, but I'm getting there. And basically, 1, 2, 3, 4, it's barely. Long story short, the bulls are defending right now 18,000, basically 18,100. So every time the NASDAQ price gets down to 18,000, the bulls buy it up, right? Just like here and here, those two spots. But you'll notice that the bears are advancing. Every time they sell, the highs get lower and lower, and here might be another lower high. So as long as those highs are getting lower, eventually this back and forth between the bulls and the bears is going to get compressed into this triangle and would break down. And if that were the case, right, and if I were doing like trading triangles, which I don't really do, I might consider targets. Oops, sorry. This is really not something I would trade. I don't really do it this way, but I look at a target down at 17.4. If I was just like doing a short, just going to, hey, take a short, take a risk on the short. And it was like a swing trade. And I don't mind holding this for a few days and risking the fact that Trump might say something to screw it all up, because it's kind of what he does. And, whatever. I'm not saying he shouldn't. I think he's doing things to help the whole situation. I think Trump has a method to his madness, and I think Trump is actually taking orders. I don't really think he's doing it all himself, as many people think he is. I think he's got far more powerful people giving him direction with maybe some latitude. But long story short, I would say, yeah, down in that low 17s area would be a nice target if I were shorting. But that's a whole nother thing, right? I probably would wait until price broke below at least 18,000. And then I don't really trade these indices, not yet, but I would look for a pullback and then go ahead and short down to like 17.3. So a nice little short possibly coming up for the swing traders in that world. So this probably be something that would happen like next week, maybe towards the end of the month, a little trade, something like that. So, but that's that. Not doing any investment advice here, just telling you what the charts say might happen. All right, good. So let's take a look at the actual metrics for Bitcoin. Now, as I said, the calm before the storm. So price is becoming increasingly quiet. You'll notice with Bitcoin, the swings were going from about, say, 81,000 all the way up to like 88 pretty consistently. And then you had that panic down. But now the swings appear to be kind of limited between 83,000 and 84. And it's just kind of staying in this range and getting even more quiet. Well, considering that we have Good Friday and a lot of markets will be closed tomorrow, considering that we have, Monday, a lot of European markets will be closed on Monday. There's just a lot of market participants who are taking a break. And, there's the old saying, sell in May and go away. So it may be that we also see things happen that way. But again, that usually is more of a typical way of looking at the markets, right? So we're not in a typical market. And I'm going to let the algos be my guide rather than old sayings. And for the moment, let me just take a brief look at the high time frame stuff. I know it's a mixed market. So Bitcoin itself on the high time frame, I mean, this is the monthly chart. We're going way, way out here, okay? Let's say price is coming to a decision point. 76,000 on Bitcoin is important, right? So basically the top of what happened on the way up here, 76,000, more or less, 74,000. And price did bounce off that. Each one of these candlesticks is a month's worth of price action. So this is a very high time frame chart going back to 2023, halfway through it. So that bounce right there, we would need to see price not really dip too far below this. Now, this could take a few months. We might not see price break above 90,000 or 95,000 for months. But if price can stay above 74,000 consistently, right? Now, we might see it dip below that, very briefly, maybe for a week or two. Remember, this is very high time frame. So people might kind of panic for a bit because price like dips here, but then it comes right back out and it'll just create a candle with a wick. But it might be that towards the end of the year, we find that we get a new high. It's very possible. It's not unheard of, but we would have to just be watching. A lot of it's going to have to do with the rest of the market, how the rest of the market does. Very much, right? So let's take a look at what I think Bitcoin will do very soon. Okay, so it's just so flat. It is very flat. Bitcoin is not showing us a lot. You know what? Here's how I'll measure this. Here's how I'm going to look at it. This is a broader range between 81,000 and 88,000. And Bitcoin bumps back and forth between those two. So how it behaves when it breaks out is going to tell us a lot. If Bitcoin breaks to the downside, it's probably going to go down to 74,000. If Bitcoin breaks to the upside from this larger range, it's probably going to head up and grab 90,000, maybe 95. You have a lot of 90,000 important areas here, right? So it could go to 90 or 95. It's just going to depend on the rest of the market. And with such little volume and volatility, you're going to find that those breakouts might not have the power that's needed to make a difference. However, there is the flip side of that scenario where, because a lot of people are out of the market, the smart money can push things in a way that's less expensive for them. So if the smart money wanted price to go to a certain area, then when everybody is at Easter or asleep or watching the Super Bowl or whatever it is, sometimes you see these massive moves where they just go ahead and spend the money to move price where they want to see it. Now, a lot of times those are in concert with like options expirations and things like that. So Solana, looking right now just a little bit more bullish on the price action standpoint. This can be a clue, because Solana tends to move in the same direction as Bitcoin during times like this, but it tends to move in a stronger way. And right now it is bullish against resistance, but Solana may find its way up to the 150 level if it remains unchecked and if the rest of the market doesn't have a problem. Solana has a bit of a short-term bullishness left over. Initial resistance will be sitting at 147. Right. So just to look at Solana and the NASDAQ, one last look here, and we're going to jump over to the private live lab here in just a moment. But I do want to have a look at Solana. At the NASDAQ. Yeah, NASDAQ is super flat. Just looking at it, I would say, and this may end up pulling Bitcoin and everything else down. I still think, like I said before, I think we might see a temporary high sitting right here at about 18,000 or so, and price may just melt down. Now, there's negotiations with China. There's chip makers getting, potential fines slapped on them for dealing with China. There's a lot going on. So all we can really do is look at the algos, and the algos are telling me the price is going to want to revisit this 16,000 level. And I think the news will have a lot to do with whether or not it does that quickly or not. So that's the look on the general market. If you have any requests, if you are watching this and you want to see a particular chart, go ahead and put your request in the comments section. Whether you're watching this during or after, we are going to go ahead and flip over to the private live lab. We at Algo Factory are very good at teaching people how to build their own trading method. And this is important. Most people fail at trading. In fact, with Forex, 90% of people fail in the first 90 days. Lost connection there for a second. That's a common statistic. 90% of people lose 90% of their money in the first 90 days, right? So in order to avoid that, the best way to do it is to learn from people who know how to make money in the Forex market. such as myself. Now, we don't give investment advice, and we do talk about what we think the charts will do in the market. That is for certain. So that could be part of your research, and I do share some of my trades in there. It's not too often that I do that. Some weeks there's a lot more, other weeks they're not. We're not a signal service. We teach you to build your own trading method, and this is a very successful way to do it. And anybody who says, "Hey, get rich with my system," they're probably a scammer. What we do requires work. It's like going to school. It doesn't take forever, but it doesn't happen overnight. So please come on over to Algo Factory. Also, get your free algo. You can see it right there. Link is in the description. Go to the description, click on that, give us your email. We'll send you an algo immediately. It'll come in your email, but the next screen will have the algo on it. It'll instruct you as to how to build it and use it. So if you want to learn how to optimize that algo, if you want to learn how to build your own, if you want to learn how to take any algo and make it profitable, because they are not profitable on their own. There's a lot to learn in trading. Come to algofactory.tech. We hope to see you soon. We'll teach you how to trade like a hedge fund pro. Never forget.
Join us or die.
Just kidding. Alan Richtman is just kidding. You will not die. But do join us. We'd love to see you. Thanks for watching.